Hey guys, what's going on? Today is March 27th, 2021. In this video, we're going to take a closer look at a ton of charts that are going to help you trade the markets next week between March 29th and April the 1st, the Fool's Day. Yes, don't be fooled by this bullish price action on Friday. The first chart we're actually going to have you take a close look at is the chart of S&P 500. And before I actually give you the answer, is there a particular pattern that you can identify here within the candle formation between October of 2020 all the way through March until now, March 2021? I'll give you 2 seconds to make it more educational. Hopefully you can arrive at the answer on your own. So there is something within these candles that could help you identify with a 90% accuracy of what will happen when the market opens on March 29th, going forward about 72 to 96 hours. So in order to go through this simple strategy that anybody can utilize, first you have to understand the current existing conditions. So we've got 2 candles. One was a bullish reversal candle when we hit a low of 38.43 on Thursday. Now, we posted a video Wednesday when the market was at 39.33, basically suggesting the market was going to make a quick move lower, a lightning fast crash. And so it did come in. It didn't crash as much. And in this video, you're probably wondering, like, well, are we still going to go lower? Are we still going to go much lower? And so I'm going to give you this precise answer in just a moment. But for the purpose of understanding this simple illustration right here, guys, focus on these 2 candles. So we have a bullish reversal candle followed by a bullish move higher into the close on Friday. Now, generally speaking, you have these bullish moves on Friday afternoon between 2 and 4 p.m., between 3 and 4 p.m., guys. Historically, they happen on Friday of the job report. Now, this is important to understand because when the federal government releases the job report next Friday, the markets will be closed. And it only happened just on a few occasions throughout United States history where the job report is being released on a day when the market is closed. So the general thinking right now in the market, okay, it's going to be a holiday weekend. Generally, during the holiday weekend, there's not as much volume. Now, that is a generalization that puts a lot of people positioned to be highly bullish. Of course, lower volume makes sense on a week where a lot of people can be leaving the office early, but also the opposite is true. Nobody wants to hold no big-ass positions over a long-ass weekend when the job report is going to be released on Friday when the markets are closed. So there's a great probability that Thursday night on April's Fool, don't be the fool to be buying calls thinking that the job report is going to work out, because you could be just one of the few people that are going to be doing that, because the high probability that the market will actually sell off in the last couple hours on Thursday night on April the 1st. Now, I'm recording this video on the 27th, so we got 6 more days until that happens. And going back to this candle formation right here, guys, now that we understand the general conditions, one thing I mentioned about these highly bullish candles, they happen on the day of the job report, and this time it actually happens on the week prior to the job report. And basically, we're front-running potentially good news a week ahead. Now, what you should also know, on the week of where the market reaction to the job report is highly positive. And historically, when we would get a highly bullish candle like this, as we just got on March 26th, the stats are bulletproof, okay? In 70+% of the cases, when the job report reaction is highly positive, the market is advanced in substantial number of points, it is reversed within 72 hours. So meaning if the highly bullish move happens on a Friday, it will be reversed Monday, Tuesday, Wednesday. And I'm going to show it to you utilizing these candles on this chart right now. So the first instance we're basically looking at is this instance right here. As just described, you got a bullish reversal candle off the key level of this blue line, which is a 50-day moving line in this case. And so we're trying to basically use the history of the candles prior to this instance to understand what is going to be the outcome on Monday, Tuesday, and Wednesday, which would be highly important if you're trading weekly options. So first instance, try to identify it on your own. We don't have to go very long backward on this chart. There's an instance right here. We have a bullish reversal candle off the blue line, right? Similar formation to this candle. You got one right here. And the candle size right here, guys, almost matching the size of this candle. Now, the size of the candle, it's important because it basically communicates to you the magnitude of the move. So these, in these cases, they're almost identical. I mean, it was a rather substantial move right here, guys. So this is the instance number one, if we look at the history. And look what happens next. Okay, despite of all these bullish actions, the next 2 days, not only do we erase entirely all the gains, but we actually go below, because clearly we breached the blue line briefly here before we bounce again, and that would be the second instance of a large magnitude white candle, which would be positive, right? Highly bullish move again, and look what happens next. Now it resolves into 3 days lower in the market. So now we've got 2 instances where after a highly bullish move, the market does what? Opposite to the general belief, where things just look highly bullish, the market does exactly the opposite of that. Now let's identify any other instance on this chart. Also important to acknowledge is, how does this rhyme with the MACD indicator? It's a simple indicator, guys. We talk a lot about it in our charts and divergences course. And generally, there's going to be some instances where some of the def crosses, the definition of a def cross would be when the black line crosses the orange line, right? And so if you look in the history of these crosses, such as, for example, this one right here, see when it crosses, what do you get? You get a sharp sell-off. Now, in some instances, it's not going to be quite obvious as this, because MACD is going to put a little bit of a fight on the indicator, and you're going to have situations where it looks like it's going lower, but overall it doesn't make like a bearish move until later, and it's just not as self-evident in some instances that the bearish move is postponed. It's paused. It's postponed. It's coming, right? Like it finally breaks here. It's coming. But before that, there is an instance where it looks like we're going lower. Okay, we're making the def cross, but we're bouncing out of it. And so how do you differentiate situations like this? And because we're at that critical moment right here where we just made a def cross, and now it looks like MACD is working its way back up. And so we recently had an instance like this. So this situation right here, I believe, is an instance that will highly reflect what's about to happen, because the MACD condition is also met right here on this chart. Basically, when it starts, you see it tries to curl up a little bit here as if we're going into a bullish move, but then it surrenders and it drops. And so we're likely to get this sort of scenario next week, where it looks like MACD right here is wanting to make a bullish cross, but it actually is going to unravel lower and hit some lower levels under the orange line again. Now, what makes this instance, current instance, resembling this instance, of course, the MACD, but what makes it have even a grander potential on a downside move is the fact that we just experienced the high sell volume preceding to a potential move lower that could have been much greater, and it stalled out just under the blue line, while it had a lot of potential to go lower, such as in the case right here. And if we take a look at this situation, the candles are slightly different, but as you can see, the market is dropping, but then it's got 2 white candles back to back, and then you get some major drops right here. So you get 1, 2, gap down, another break lower, and then the market stalls. So basically 3 days. So considering some of these instances right here, let's find some other ones that could represent a similarity here. So here's the situation right here where you got a bullish candle followed by another big magnitude white candle, okay, which is bullish action, big bullish action. And notice the next day, we don't necessarily go substantially higher. We pause and then we drop, we make another pause before making 3-4 sort of days lower. So looking at all these instances where you have two bullish candles back to back, here's another instance right here where you have a big white bullish candle right here, and look what happens next. We drop a little bit, pause, drop. So if you take a case basically of any big magnitude white candle, with the exception of this one, right? There's a lot of stalling out action. The market initially the next day moves slightly higher, reverses the following day, and stalls out, and then finally gives in and makes 2 days lower, basically surrendering all the gains. So this is like a grand move 11 formation right here. So if we take basically all these instances, guys, here's a slightly different instance because you have a few exhaustion gaps, finally this final exhaustion gaps, and then the market goes starts breaking lower like multiple days, not just 1 day, not 2 days, not 3 days. It goes 1, 2, 3, pause, 1, 2, 3, pause, 1, 2, 3, 4, 5. This is like major move lower, right? Which takes us from all the way from 35.50 to 32.50. So we could be going into a setup scenario just like this one right here. Okay, and if we look at another instance of two bullish candles back to back right here with stronger magnitude, we're going to have another situation where after the second bullish candle we have 1, 2, 3, 4 days lower. So there's an overwhelming amount of evidence, guys, where we got about 80+% probability that the market Monday, Tuesday, Wednesday is going to be doing one of the two things. The highest probability, it will surrender all the gains for the last 2 days, which basically is going to put us back under the blue line or right at the blue line, which would be a level of about 38.73. Now, there is a probability that initially the market could go slightly higher on Monday, like 10, 20, maybe 30 points, and then it's going to reverse out from there. Now, based on all of these circumstances that we've looked at before, there is a greater probability the market is going to gap down slightly lower and then create even lower lows throughout the day. Now, there is a great probability, considering some of the other factors on this chart, that we could go through something similar like this, just as the whole world is highly bullish, thinking that since the market closed at all-time highs, it's going to go to 4,000, 4,200. Hey, I'm sure some analyst is going to be raising price targets over the weekend, maybe raising the price target on the market to 4,500. I wouldn't be surprised at all. However, there are signs, not just on this chart, which there's clearly some other evidence as the price action continues to move higher. We got definitely lower levels that we're hitting here on the RSI each time we are moving higher. As far as the price, the RSI continues to diminish. So that is an RSI divergence versus price action, guys. Generally, it will resolve into a grander move lower. If you look at all the sell volumes, they are definitely exceeding the buy volumes, with the exception of this one right here. Predominantly, people are taking money out of the market, not putting money in the market as the general perception is right now in the marketplace. Now, let's glance at the next chart that actually proves this very point, that people are taking indeed money out of this market. One last thing, guys, before we glance at that next chart, I wanted to bring your attention to the weekly chart of S&P 500 and bring to your attention this very interesting situation that highly resembles current conditions. So basically, from 2018 of December, when we hit the lows right here, the market's been rocketing higher all the way through February of 2020. And the time frame resembles this time frame that we're going through right now, basically from March lows last year going on to right now. And so as you can see right here, it's been a highly bullish trend, followed by a complete insane fallout, which, by the way, we did predict here at 13 market moves. If you view our channel, we did nail the bottom as well. So we predicted this crash way before COVID was even known to anybody. And then we've nailed the bottom right here. People thought I was losing my mind when I said buy calls right here, and it coincided with the absolute market bottom. So now we've been going higher for about the same time frame as we've been going higher from the last substantial drop in the markets. Because if we were to look at the prior chart, I mean, we were up here, had a substantial crash right here, and then so this uptrend lasted about 13 months, and now we're at about a 12-month time frame. And the only story that you guys really hear in the news right now is what? Oh, well, let's celebrate the 1 year since we hit the bottom. You know, let's celebrate the market at all-time highs. It is so stupid. Just think about it. Nobody was on the news saying, oh, it's the market bottom. It's the fucking bottom. Now they're celebrating the market top, and they don't even understand it. Oh, yeah, look how well the market has done since it fucking crashed, you know, in last February and March. Okay, nobody seems to understand that these time frames, about 12, 13-month time frames, okay, the longer this sort of formation goes, okay, the climax in these bullish momentum type formations over 12, 13 months, they resolve in this type of candles. And that's all that I've been showing you guys on the prior chart. So if you focus right here, what do you see? You got two bullish candles after a substantial uptrend right here. You've got two bullish candles after a substantial run-up from 13 months moving higher, okay? Very similar to the circumstances right now that I've shown you on the daily chart, guys, and look where it resolves. So the last time we have a circumstance where you got two highly bullish white candles back-to-back representing bullish momentum in the market, we get drop, drop. Second two white candles, we get a fucking crash. And nobody's paying attention to this. This is why it really pays to really focus on the charts and study the hell out of them, guys. So basically we had this substantial move higher, right, that resolves in an increase in magnitude of the move. Because look, if you take a look at all these smaller candles right here, right, look at how small. So the magnitude of the move was small, the market kept grinding higher, the news was positive, the sentiment was positive. All of a sudden we get outsized move that is pretty much double, triple the size of the daily moves we're getting here. That's when we finally get some downside action, followed by an outsized move higher, and that's when we collapse. Okay, so the market conditions are highly similar. The time frame is similar. So, and the fact that everybody's so bullish at the same moment in time in the markets that they cannot really even think, hold on, it's been a year since we hit the bottom. The market is up 80% since March lows of last year, and the only thing they can see is the market going higher. See, they couldn't see the shit that was time to buy it right here. We saw it. We saw this situation, and I'm telling you right now, based on the charts, based on what the 13 markets move formula shows us, guys, based off the charts divergence, based off everything that helps us nail this 5x, 10x, 20x trades, I can tell you that we're very close. Where the market sentiment is so bullish right now, they don't even think of this time frame of how close we are to a substantial correction. And I'm not saying we're going to go, you know, and slash it like we did last time from 3,400 down to 2,200. But what I am saying, we can easily go to this 3,400 level. So the candle history, guys, is highly precise. I would not bet against it. Okay, we've got some major catalysts. You may be thinking, okay, well, what could be the catalyst? Everything is so damn bullish. Every time I turn on the general media, all I hear is how the market's going to go higher, how things are just so great. The economy's reopening. We got no choice. People going to go outside. They're going to spend. You know, these regular stocks that used to be regular stocks, now they're going to be like the tech stocks. They're just going to, you know, rocket at crazy multiples. Guys, I mean, it's just a fucking story. Stop listening to the stories and pay very close attention to the charts. That's how you're going to get paid as a day trader or a swing trader. Okay, so with that said, notice very critical circumstance right here. Okay, and sometimes it's very important to look at multiple time frame charts. The reason is sometimes you look at like a daily chart and you're going to see a death cross on MACD. And sometimes you look at the weekly chart and you got a bullish cross there. So, or the vice versa, you got exactly the opposite going on. So what you want to see when you're trying to place a sizable bet against the market, you want to see the synchrony. You want to see, you know, multiple time frames pointing to the same development. And that is exactly the case with S&P 500 that we've got right now. Okay, guys, so to help you visualize, I'll summarize this in just a few simple sentences, okay? Trading stocks and options is just like dealing with girls, okay? What you don't want to do is you don't want to keep chasing this uptrend, okay? I mean, if you keep chasing the same girl, okay, what's going to happen? You're going to run her off. Okay, she's going to think you're a maniac. She's going to think you're a lunatic. She's going to think everything besides what you really want this girl to be thinking about you. And what I'm telling you is you don't want to be chasing this market at all-time highs because it's going to do exactly the opposite when you're trying to chase it. See, you want to be cool. You want to let the trade come to you. So in this case, when the market was collapsing, everybody was panicking, they were getting out. That was the time. The trade came to you on the call side. Now, this time, you don't want to be using the strategy of, you know, buying high in the expectation of selling higher. See, the strategy is the same. It never changes through thousands of years, okay? It's buy low, sell high. So this was the low that we nailed. Yes, I get a lot of shit from people like, Leo, you never trade calls. Bullshit. Go look at these videos. I said buy calls right here. Now, I wanted to buy calls right fucking here. I don't want to buy calls right here. I hope it makes sense. I mean, if you're a student of the market, this should make a lot of fucking sense. I don't like using the strategy, you know, short low in the expectation of short and low. And there's going to be some instances of exception, which actually I'm about to show you a couple of exceptions because it may look like a low, but it can go a lot lower. So how do you differentiate that? So pay close attention. I'm about to introduce you guys to some charts that is going to make a profound difference in your trading. But the idea is simple, guys. Don't chase the girls. Don't chase the fucking market. Let the market come to you. And right now, the market is coming to you and it's saying, hey, short me right fucking now, okay? I'm at all-time highs. I'm high as a kite. And I'm about to crash. So take advantage of it. It's simple, guys. You want to pull the trigger and you just want to buy puts. That's it. And then you got to be patient and position your sizes, and you got to risk manage your stuff, guys. If you don't know how to do that, the easiest way I can suggest how you do that is you click the link below and you work with a 13 Market Moves coach. And it all starts with a 20-minute coaching call. All right, enough said about that. Let's roll and talk about the next chart that is of great importance. The chart we want to look at is the chart that the whole world is bearish on, which is the chart of the US dollar. So in the last video, I've pointed out that there is a highly bullish formation that is definitely being created on the dollar chart. Since we've posted that video, the dollar was at 91.5, and I mentioned a key level of importance, which was 92.5. And so since then, we broke above that. We didn't break above 93 level yet. The importance of these 93 and 94 levels, guys, is the fact that so many people are short the dollar. We can get a major short squeeze. And jumps in dollar generally will coincide with major market sell-offs, because think about it, as people are liquidating stocks, what are they getting in return? They're getting dollars in return. So as the demand for dollars increasing, this chart points to a breakout higher in the dollar, which would be bearish for things like Bitcoin and gold and so on. Now, sometimes these correlations could be broken, and despite of recently dollar moving higher, gold prices have not reacted yet. So it appears we're going through a sort of delay effect between the correlation on the US dollar and gold. But this definitely points to a fact that dollar has got a long way to run higher from here. Particularly, the one piece of evidence is more fundamental, because the chart clearly points to a breakout higher here, but there is one fundamental evidence that most of the people tend to underappreciate about the fact that the dollar derives its value not from the relation of gold to the dollar, dollar to the gold correlation, but rather how does the dollar behave itself in relation to other world currencies. And since we fundamentally have a much weaker economy right now in Europe than currencies like British pound, euro, okay, they are not going to be appreciating against the dollar, but rather the opposite is about to happen. Dollar is about to appreciate against those currencies. And that makes it a bullish case for the dollar for the next few months, as the United States economy overall going to outperform the economies, the global economies worldwide. That actually makes the case for a stronger dollar, despite of the fact how much money the United States government is printing. Okay, again, everybody is printing money. So what the fuck is the difference? All right, the fact is the United States economy is positioned to be stronger than the rest of the global economies. Therefore, the dollar moves higher. Now, the next chart we're going to take a look at is to show you the very point that the other world stock indexes are on the verge of breaking lower. And it is a domino effect. We had literally an entirely broken correlation because the stock exchange in Tokyo, in Japan, it's typically highly correlated to its impact on S&P 500 futures. They pretty much, you know, when Nikkei drops, S&P 500 drops. That has not been the case lately, because throughout this entire drop right here, okay, we had Tokyo dropping 400-500 points every day, and it had very little impact on the S&P 500 futures. Now, again, sometimes these correlations will be broken, but they do maintain the positive correlation above 80% of instances. So a correlation can be temporarily broken, and all of a sudden it gets its mojo back, and we see some wild moves at the same time in the United States market as some of the other markets experiencing some turbulence. So in this case, we have a situation, guys. It's pretty clear. I mean, it's a double top right here. Let's go ahead and glance at this chart here. So we've got a double top formation right here, and we're at a perfect shorting area right here. Basically, the market gaps down. It creates an equal gap up, but it's facing the resistance right here, while MACD is what? It's in a highly bearish crossover. So Nikkei could potentially make a slight bounce and then reverse lower from here. And if at that moment, okay, this correlation between S&P and Nikkei gets back on track again, we can see some substantial moves coinciding with a reversal here in Tokyo Exchange. Now let's take a look at the next one right here, which is going to be Hong Kong, HSI. And look, we've got on this one, we have a different bearish pattern. On the other one, we had a double top. On this one, guys, we have basically a simple head and shoulder formation. You got head, shoulder one, you got head formation right here of the pattern, you got another shoulder right here. And so promptly it drops, It's got a small bounce, right? And so small bounces your friends as a short seller, so short the bounce, right? You've watched the new traders video we posted earlier today, how he shortened the bounce and a move 3 formation to take his account from 1K to 11K, guys. If you didn't watch that video, check it out. It's a great video. Just from somebody that's been following the channel, been paying very close attention, and understands how to trade a move 3. So great job on that. But so the next move from there, it's a move lower. All right, so you got head and shoulders, slight bounce. You want to short the bounce. The next move is lower, and all of this happens under the conditions of what? A crossover right here. It tries to run up here in a bullish crossover high, but it fails. Next chart. Germany is making a double top. Guys, these charts are easy right now. It's making a double top, right? Top. And at the same time, while MACD is about to make a bearish crossover. So if you want to short Germany at the double top, guys, it's the short seller's haven. It's short seller's paradise. You like to make money when stocks drop. This is it. It doesn't get better than that. I mean, it's a fucking market top. So let's take a look at some other charts real quick, just to make the case even stronger. Here's what we've got. We've got stocks like Apple. What do you guys see? It should be simple. It should be very simple right here. You've got a major head and shoulder pattern developing. Can you guys see it? All right, so basically you got shoulder 1, you got the head formation, you've got shoulder 2, favorable to break above the blue line. And so where does Apple go? Apple goes lower. Apple goes lower, guys. All right, and so all of this is happening at the same time where it looks like it wants to form this bearish formation, but overall MACD is about to make a def cross right here, and we're about to see MACD move lower right here. All right, next chart. Actually, before I move to the next chart, let me mention this. The distance between the blue line and the orange line is definitely shaping a further potential development for a def cross. In other words, at one point the blue line will intersect with the orange line. It is likely to happen over the course of the next 60 days. So Apple could potentially drop all the way to 90 bucks, which is over 30% drop in Apple. And we know one thing, okay, despite of how bullish Dow Jones has been, if Apple drops 30%, there's no way Dow Jones can move higher from here. Now, if we take a look at some other heavyweights, Amazon is telling us a story that is about to happen to Apple, because if you take a look, we're a lot closer on this def hook formation, which is going to resolve in a def cross. We've had multiple shorting opportunities on Amazon. Congratulations to all traders that have partaken in these Amazon puts throughout the week. As you can see, Amazon is really struggling. And being a heavyweight, look, I mean, this overwhelming situation right here, guys, okay? I mean, look at this. We're heading for a def hook about to turn into a def cross right here on the MACD. At the same time, we're getting the same confirmation right here. The blue line is on the verge of crossing the orange line over the course of the next 2 weeks. If that takes place, Amazon is likely to take out its key support level at 28.81. And if Amazon breaks below that level, we could see Amazon at 2,500 bucks. Shocking, but it's about to happen. Now, last heavyweight we're going to take a look at in today's video is going to be Tesla. And Tesla is probably the easiest trade. It's got absolutely the shittiest chart among all of these guys. It can't catch a break on anything positive. And again, some of you thought I was nuts mentioning a level of 350, 450 on Tesla. All it would be doing to arrive at a 450, 350 price level, it would just be completing this move 11 formation. So the move here, right, back to this level right here, all it's going to do is going to complete its move 11 formation. So check it out. From here all the way to here, here's your grand move 11 right here, guys. Okay? And within that, okay, look at this. Head and shoulder that we've pointed out. It was right here before the drop. We posted the video, recommended shorting it at 873 on the black candle right here, guys. We've posted another follow-up video on Tesla telling you that it's going to bounce back to 700 after this big drop right here. And we told you after that, gradually it's going to work its way lower. And at this point, there is too much pressure on the stock. Because if you think the pricing on Tesla largely at these levels was based on how great it's going to do in China. Well, with all tensions between China and the United States right now, you guys have seen what happened to Baidu. We've been short Baidu until we reversed into calls after a major drop on Friday. We've been short IQ. We've been short all of these names, guys, that are heavily related to China. And so they may pause at this point, but Tesla still got a ton of room to drop here. And so if we take a look at Baidu, right? I mean, we've been short Baidu here. We've been short Baidu here and here. And we've been short Baidu here. And the last time we shorted Baidu, I sent an alert to this group. I've sent the alert to the paying members saying, hey, noticing that it's back to 220 level on Friday pre-market about 7 a.m. I sent an alert to short it. Now, when it dropped, and we didn't nail the bottom, I said buy Baidu calls. And so for those of you that stuck with the trade, I mean, you made a killing. That was a 20x trade right here, depending on your entry and your strikes. So, but look, the same formation here on Baidu. And at this point, Baidu is down about 40% from the top. Well, Tesla is still not down 40% from the top. It's got room to go. The best trade we had on Friday, easily bar none, was this IQ trade. And I sent out the alert pre-market to short the hell out of this thing when it was still like around 20 and hit a low of 14.6. And these options were super cheap, guys. So don't be missing out crazy trades like this. Click the link below, guys. Schedule a 20-minute coaching call so you wouldn't miss out trades like this. So the reason why I'm showing you these stocks right now, guys, is we've gotten into all these trades way before, okay, way before these headlines surfaced today. Goldman Sachs sold 10.5 billion of stocks in block trade, and guess what they were, right? I mean, they were Baidu, they were IQ, they were all of these things. And if you dig a little bit deeper into the story, there was a fund that Goldman Sachs was liquidating its positions for, and just in Baidu alone, they sold about 6.6 billion. But the point is that hedge fund faced a margin call. And this could be just the first domino in a series of hedge funds that are about to get their margin call. Now, coincidentally, Goldman Sachs selling the shit out of these China-related stocks when the market hits a top. So if this is not a sign to you as a trader, I'm not sure. I mean, what else could be a sign to help you understand that the market is on the verge of a serious drop here? And honestly, the only question I would be asking myself if I was watching this information as a viewer is how the hell did 13 market moves know that Goldman Sachs was about to sell 10.5 billion of these stocks, IQ, Baidu, and how the hell did the 13 market moves got ahead of them on this trade knowing that they were going to sell these China-related names? See, the truth is we didn't know that Goldman Sachs was going to do it, but we looked at the charts and we traded based off the charts. So maybe you're making all your decisions based off watching headlines like this. Well, typically when a headline like this comes up, the major move in the stock has already happened. So if you're going to go and put on this position on, short in Baidu, chances are it's not going to drop another 40%. It doesn't mean it cannot drop, but it all depends on your entries and levels at this point, whether you're going to be able to make money on either call or put side on Baidu. But that does give you a red signal saying like, hey, hold on, stop. Stop being a bull here. at the market top. Stop using the strategy of buying at all-time highs because the probability is against you. Okay? Even if I'm wrong on my estimate, which I don't think I am, that the market will absolutely collapse to a level of 3,400 on S&P in the next 30 days, okay? I may be wrong on the magnitude of the move, but I'm definitely not wrong on the fact that the market will be making some substantial pullbacks. So we notify our alert members, we notify our coaches and everything about the upcoming moves in the market. So if you don't want to miss the next killer trades like this, guys, the answer is simple. Click the link below, sign up, take action this weekend so you can position your accounts for success the next week. So the signs are here, not only in the charts, but now they're surfacing in the headlines. And the only question is, what are you going to do? So Leo, I'm still don't have a clue what the hell I'm supposed to do here, man. I mean, it all sounds good and everything. I follow the candles, but damn it. Guys, for those of you that hang this long in the video, I'm about to give you 3 stocks you should pay very close attention in the next 4 days, 5 days, 6 days. These stocks can make you a killing. So stock number 1, BABA. So needless to say, the question arrives, is the $10.5 billion sale in Chinese assets in relation to a hedge fund that faces a margin call, is it the end or is this the beginning? And based off the charts, this is just the beginning. So let me demonstrate this a little bit closer for you. Here's exactly what we've got here, guys. If we were to show you, there's 3 major developments on the chart of BABA that are screaming for a move lower. And I love the fact that they coincide with the exact same time. They have this guy on CNBC. His name is Mike Koo, Asian-looking guy. Great guy. I don't have anything against him. It's just I do have something against his last projection for BABA. And in his last video, he basically says that what he's doing, or you should be doing, is you should be buying BABA calls. And he lists some far out reasons. I mean, he sounds just like this chartist they got out there that was laying out a bullish case for Tesla when Tesla was at $870. I'm surprised the guy still gets to keep a job. I mean, I'm wondering if any of these fucking guys get any negative comments when they get shit wrong, because they get shit wrong all the time. But I guess it's okay because they're in the news. So, with that said, what the hell do you guys see on this chart? Okay, well, the number one fucking thing you should be seeing is this head and shoulder formation. Let me draw this in a different way, but guys, God, that's a beauty. I mean, if you ever witnessed a bearish, let's call it a bearish compilation. Let's call it a bearish masterpiece. A bearish formation that happens once in a blue moon. No, once every 10 years when all the stars align. Let's call it the constellation of all the bearish formations. So you've got the head and shoulder, damn it, okay? You've got this death cross that's going on right here, guys. You've got a major death cross. Come on, help me draw death cross here. Fuck it. Death cross right here. Okay, that's highly bearish, guys. Okay, so you've got a head and shoulder. Let me help you draw a head and shoulder just a little better. I mean, I just don't like the way it looks right now. Okay, so shoulder 1, head formation, and you got shoulder 2. And this is where Mike Koo actually comes out on CNBC and says he thinks the next move is higher. 13 market moves formula says the next move is fucking lower. Now, Michael is still going to keep his job, even though I have a 99.9% probability. basically call it 100% probability that BABA is going to trade less than 227 in the next 30 days. And to make my case stronger, guys, if you're following the charts, here's the def cross. Get back to my thing here. Where was this beautiful thing I was just using? Vertical. Yeah, that's what he wants to do. The vertical. He wants to do the vertical call. No, he wants to do the diagonal bullshit. He wants to sell the 245s, buy the 250 calls in 30 days. Guys, for any of you that are like, oh, I'm good at selling options. Okay, fuck you. You're not making any real money. Okay, you're not making a few $1,000,000. You're not even making fucking 500 grand. Okay, simply because, okay, if you knew exactly what you were doing, you'd be turning fucking 10K into 100K every other week, and in some weeks, every week. Okay, so you're not doing that simply because what you're trying to do is you're trying to minimize risk, but by minimizing your risk, you're also minimizing your gains. There's no way you can sell call spreads. Look, all the other bullshit strategies, all these complicated strategies. Number one, they cost more to put on the strategy on. Number two, okay, they limit your gains. So why the hell would you even mess with that shit, guys? I get this question all the time, so I thought I'd just get it out of the way. So basically, CNBC against 13 market moves in this particular case. Who wins? Of course, 13 market moves. That's a fucking given. Before the shit even happens, I'll lay out to you why. I'm drawing this Christmas tree here for you, basically showing you why my coup is wrong. Ain't nobody's gonna fucking acknowledge. I'm probably gonna get a shitty comments right now saying like, oh, Leonardo, but the fucking CNBC, but my coup, but bullshit, okay? This is exactly why you guys are not making any real money in the stock market, because you pay attention to what? To the general consensus, to where the herd is going, to where are you, but fucking bullshit. Focus here with me. I'm about to lay out to you how you can make a killing trading BABA. And so once in a blue moon comes a golden child. A golden child that is birthed in conditions of the death cross, which is highly bearish. In conditions of a head and shoulder pattern, which is developed not over like 3 days or 5 days or 10 days or 20 days, it's developed over the course of a few months, which is exactly what you want to see, and that's what you want to bet basically against when you're, and this is your shoulder right here. So, and it coincides with a death cross right here, with another death cross right here. Oh boy, we should make a movie just about this chart alone. I don't know why I'm spending so much time talking about this, guys, but you know, well, I spend a lot of time talking about a particular chart. You know, it must be important. So the only concern here is this. Well, it appears like everybody that wanted to sell BABA stock have already sold. And for that reason, we're going to take another look. All right, we're going to take a look at a chart of BABA on weekly. Yes, that's exactly what we're going to do. Oh, whoa. Now I see it. Leo, why didn't you just show me this chart in the first place? I mean, it's clear here that you're getting, Leo, I mean, you know, you started with the wrong chart. Why didn't you show me this head and shoulder first? As a matter of fact, let me show this to you right now. Okay, so this is your shoulder 1. This is your head formation. This is your shoulder 2. And just as a number from 13 market moves, in 70+% of the cases, this will resolve in a move lower. Not an instant move lower. Sometimes it will result in an instant move lower, but over this continuation into here, okay, we're destined to go lower. That's what this chart formation is communicated to you, especially when it coincides with the daily chart I have just shown you, which exactly is the same replica of this head and shoulder formation, damn it. And you can't deny the fact, like, this is a beautiful, beautiful bearish case study, I mean, you can possibly come up with. So you've got the bear cross right here combined with the highly bearish head and shoulder formation. Okay, you're still above the orange line. So basically what you're guaranteed, this is what you're guaranteed in this trade, is that this bullshit is going to drop to 194. Okay, but considering some of the levels right here, okay, this thing can easily drop to 170. Okay, this is how simple this is. While CNBC might go, let's buy some calls. Buy some calls. Okay, so just as a case study, I mean, maybe you're out there trying to identify, should I buy the 13 markets move course or not? You know, fuck it. Let this be the decider of whether you want to buy the course or not. Why don't you track this BABA trade for the next 45 days? Hey, fuck it. Next 30 days. Okay, let's make a deal. If this shit does not drop to at least 194, don't buy the course. As a matter of fact, send me an email. I'll give you the charge divergence course absolutely free. But if this shit hits 194 in the next 30 days, okay, don't bullshit around. Click the link below this video and get yourself the course that will help you change the outcome of your trading career. And with that, the outcome of your life. So, I just showed you guys how consistent this chart is, not just on the daily, but we combine it with the weekly. When you look at multiple time frame charts, and they point to the same outcome, guys, that gives you a high probability trade. And that is a beautiful thing. But there's something a little bit more beautiful because it actually has a catalyst behind it. And I'm about to show you two charts. Since you've stayed this long in the video, you haven't fallen asleep yet. Okay, I'm going to give you two charts. I'm going to give you two stocks that can take your account to the moon on Wednesday. It's going to be Wednesday. Let's see, when is Wednesday? I'll give you the date for Wednesday. It's going to be Wednesday, the 31st of March. Yes, we got 31 days in March 21. So here it is, guys. BA. A fucking chart of the week. Okay, here's what we got. MLM. And Leonardo, what's the problem with this stock? Well, there's a shitload of problems with it, and we like it a lot. And so let me take you to the daily chart so you can visualize this beautiful trade in progress. So what do you see when you look at this beauty right here? Don't be afraid. I mean, just shout it out. I mean, we're just talking about trading here, guys. What the hell do you see here? Do you see a problem? Do you want to go all in on calls? Do you want to tell your wife that you found an opportunity of a lifetime right here on the call side? Well, if your plan is to divorce her ass, then go ahead and tell her about buying calls on this. Here's what we got. Top 1, top 2, top 3, top 4. Oh, shit. Top 5? What do we call this, guys? This is called a multi-top formation. Now, how do you know for a fact that this shit is not going to go and break out high? Because, oh, this candle, damn it, Leo, this looks so bullish, and then it goes higher. Oh, fuck. This got to be a fucking winner. Look, you got a little crossover right here. Oh, man. And Leo, didn't you see this? whoa. Leo, did you miss this part right here? Look, they're starting to buy. They're starting to accumulate this. Yes, every idiot in the world is trying to accumulate this MLM stock right now. For one simple reason only, you got a major catalyst. Biden, infrastructure, Wednesday, March the 31st. So why would you actually want to take the opposite side of the trade? Guys, this is the easiest trade, besides the BABA trade, of course. MLM, Martin Marietta Materials, would be a huge beneficiary of the infrastructure plan if there is any substance in the infrastructure plan. And considering, how congruent the Democrats and the Republicans are lately, this infrastructure plan's got zero chance of making any progress on a fucking Wednesday, March the 31st of 2021. So you really want to be taking the opposite side of the equation. It's basically, how can I explain this? Tesla announcing a convertible and the stock crashes. Tesla announcing the Cybertruck and the stock crashes. Tesla saying it's buying 1.5 billion of Bitcoin and the stock collapses 20% within a very short time frame. This is identical. So you don't want to miss an opportunity like this. Wednesday, this stock is going to make a big move. The question is, do you want to short it right now at 341? Do you want to wait till maybe it bounces to 350, 351? This is your entry right here. If it bounces any closer to this level of about 350, that's your entry on the put side, because promptly the stock is going to begin dropping. Damn it. It's going to do this shit. It's going to do this. Now, I'm not saying it's going to drop to this. I'm just trying to learn these tools how to draw this crap, guys. But you get the point, right? We're going to drop. And chances are you shorted at 350, you collected 320. That's a nice, easy 30-point drop that will get you paid as far as the options concerned. All right, and we're going to get a reversal right here. What appears to be a bullish momentum right here is going to reverse and go lower right here, guys. Like, that is how easy charts are if you understand the chart's divergences. And that allows you guys to be one step ahead of the market. Now, another stock that is just as easy to figure out as this one is VMC, which is Vulcan Materials, which be another great beneficiary of the infrastructure reform. But look at this. Guys, isn't that amazing that these charts are pretty much identical? And they're saying the same tops. Top 1, top 2, top 3, top 4, top. Oh, it's not quite yet at the top. So wait till it hits 172.5, maybe on Monday, and then short the hell out of it. This looks bullish in disguise, but the next move really is lower right here, as well as, guys, God, I wish every time the stuff was this easy. Okay, it's not, but that's why you got to spend time learning charts, learning the ropes, so you can put together crazy trades like this one. This trade will get you paid if you nail your entry, guys. And so if you don't know how to nail your entry, don't feel bad, because not everybody can. But here at 13 Market Moves, we happen to be pretty fucking exceptional at it. And so the easiest way to do this is get in touch with the coach. Click the link below, guys. There's some phenomenal opportunities in the next 4 days between March 29th and April 1st, 2021. There's going to be, guys, I can tell you right now, some of our students are going to go from 20K to 150K. Some of our students are going to go from 50K to 250K. The only question is this going to be you? So stop fucking around. Click the link below and do what you know is the right thing to do. Get more information that's going to allow you to take your account to the stratosphere next week. Let's roll. I'll catch you guys in the next trade soon. Click the link below. Schedule a 20-minute coaching call. I'll see you at the $1 million club later this year. Let's go.